Hello, everyone, and welcome to today's webinar on financial services, fraud and the future of digital onboarding. So thanks all for joining. I think we probably still have a few more joining, so we'll give it a minute or two before we fully kick off, but I'll just use that time to introduce our speaker to you and get us all ready to go. So I'm Neve, I'll be hosting the session today, and we've got a really great presentation lined up for you. So Onfido's Director of Policy and Strategic Accounts, Parker Crockford, is going to take you through what new CDD and KYC regulation means for user onboarding, why the SSN is no longer reliable and what's going to replace it, and how new technology like biometrics, AI and blockchain can help. So for those of you who aren't already familiar with us, Onfido verifies the world's identities. We build AI that compares IDs to facial biometrics, and that helps businesses onboard customers swiftly and securely. So our speaker today, as I said, is Parker Crockford. He's our Director of Policy and Strategic Accounts, and he has over 10 years in technology, finance and commerce industries, among others, and he's been a critical player at some of the top startups in the US and the UK. Parker joined us at Onfido in the spring of 2016, and he now works closely with our co-founders to drive change in financial services and open new frontiers into RegTech. So everyone that's joined, you'll be on mute throughout the presentation, but please use the questions panel to post any questions that you have. So I'll be monitoring them throughout, and I'll put them to Parker in the Q&A session at the end of the presentation. We will be sharing the presentation with you. We'll share around the slides and a recording of the presentation in the next day or two. And if you have any questions at that point or anything else you'd like to ask us, you can reply directly to that email. Okay, so I think we have a few people on now, so I'll pass over to Parker.
Thank you, Neve. Thank you all for joining, and I'm looking forward to walking through this presentation and then answering any questions at the end. So the way that the presentation is structured is going to be looking at first several industry trends, and when it comes to sort of what's happening in the market, to also what's happening with regulation, or what some of the moving pieces towards either changing or enabling or driving forward a different way of onboarding, and then sort of looking at sort of what the takeaways are and things to think about when you go back into your businesses. So to say somewhat obvious, but a piece that I think is clear to put out there of what's first driving this process of changing the way that we look at digital onboarding, and that first movement and change was moving to more of a remote experience, meaning that before you would go into a bank branch, you would sit down somewhere. I still remember walking to a bank branch to get my first bank account, and I even had to walk into a bank branch about a year and a half ago, and that was an hour and a half of my life I won't have back after coming back from spending 8.5 years of London, and where I would have preferred, and a lot of consumers nowadays prefer not to be able to do that. But if you're not presenting yourself in person, it brings a series of challenges for that. But the thing that's enabling that change in behavior and relationship is obviously the digital footprint and the expansion of the mobile phone, and being able to have more things at our fingertips, and having a much more larger opportunity to interact remotely and not have to waste our precious time or go into a branch or do other different pieces. And so what that means, and this is a famous cartoon from the New Yorker that says, on the internet, no one knows you're a dog. And this may have been the case years ago, and this possibly could have been the case 3 or 4 years ago. But over the last several years, as this digital boom has happened, platforms have become incredibly savvy of what information that they're able to gain, where they're able to gain that from, either from a passive way and or systems opening up their platforms to give you more exposure to who an individual is online. And so I would actually make the argument and challenge that this isn't as profound as maybe it once was. But the challenge now that, where we're moving forward to, from companies being incredibly dependent or having to be dependent on data that has been in third-party ecosystems, is the trend today is that data is no longer as secure as it once was. This is from, from 2017. This doesn't include the T-Mobile hack that's come out, a series of others. But the data that we thought that was secure, we thought that was hard to find. If you looked at trying to find someone's name and date of birth and address, you for the most part had to go and physically find their mail, or you didn't shred something enough and someone was able to go do that. But with today's continuous hacks, it's either every week or at least multiple times a month, you get a notification that another system of emails, of passwords, of incredible important information. British Airways had a hack in the UK. You look at what happened with T-Mobile with releasing phone numbers and unique data, which is driving this play that you can no longer be as dependent on that as an industry. And this is starting to play out with what the regulators and members of Congress and what's being discussed on a global scale of changing the way that this digital onboarding is viewed. And so what this is looking at in numbers is really coming down to lots and lots of companies having to spend more money when it comes to having U.S. fraud victims, and you can see there was a trajectory down where actually a good chunk of sort of account takeovers were going down, or identity theft, and it started to tick back up in 2017. That really comes down to a lot of the issues that you see here, where especially for the U.S., data was not, or privacy is not taken to wasn't taken to the same levels, and it really makes it a difficult place to say that the information I once had is as secure, and that includes our social security number as well. And to articulate why this is a bit of a challenge, is especially if we're talking social security numbers, my favorite thing to do is give a bit of background of where social security numbers came from and how we ended up where we are today. And one of the reason why we were given a social security number back in 1936 is a group of people got together to say, what can we do to create something to be able to track individuals, to be able to say you've worked this long and this is how much retirement we can give you. And originally in that room of making this decision, everyone said it needed to be something greater, like potentially a biometric of some description, but everyone didn't think that the American people would be able to do it. And so when it first started as you can see here on the first 40 years, no one actually used Social Security only to track how much work you're given, to the point where in the 1950s there used to be a TV program called Why Am I Famous? And a woman was, and the TV program was very simple. You would put an ordinary person in a chair. You'd have 3 celebrities. They would play a series of questions of 20 questions with them to try to figure out why they were famous or special or had a unique story. And this woman, I believe from Connecticut, got the first Social Security number, which was 111111111. And the celebrity panelists couldn't figure out why she was famous, and they actually put her Social Security number up on the screen, which obviously is a pretty interesting universe to sort of think of where we are today, you wouldn't put your Social Security number anywhere. But over the course of the years, it became more and more prevalent to use that Social Security number as a unique identifier. To give you an example, I know from what I'll talk about later about Aetna, which is obviously is a healthcare platform. They went through a process, and I know there's not 10 billion SSNs in the world. There's only, as you can see here, 450 million. They had to remove 10 billion off of their platform, and they don't allow companies to use SSNs for their employees as a unique identifier. I know when I log into our healthcare provider, they do see either you can use your employee number or you can use your SSN. And so that it became much more prevalent in the marketplace. And the challenge why it was an easy thing to do is every American now gets one, and you get it from birth. today, and the SSA, which is Social Security Association that administrates this, doesn't have the authority to prevent anyone from actually using it. And it's also used as an example in the regulations to say that level of assurance that you get to say that you verified someone to have them go through that AML process. And so obviously this piece is changing in a significant way when it comes to how regulations are positioning themselves. But the challenge you have is, we have this conversation about all of SSN's, that unique identifier, a random set of 9 digits, and everyone then moves on to something else that is something else that's unique to us. That's a number, and that's a phone number. And so this comes from an article in Time magazine that shows how a woman in a period of 10 days had lost a large amount of cash and had her whole life taken over because someone had gotten a hold of her phone number. They were able to port her phone, and then was able to start draining her bank account because that individual could get access to all the other apps on her phone, because that level of verification and being able to grab that data was already out there in the wild. And so in a very short period of time, they were able to drain it, and it took an incredibly long time for them to be able to refund that money. And at the end of the day, she lost $3,500, which she never recovered, and it took a very long time for her to actually get everything brought back to normal. And they'd even taken over her social media and everything else on her phone. So if anyone out there, if you don't have some sort of two-factor authentication to get into your phone, I would highly recommend it. Same thing for your apps to be able to prevent this. And so this just gives you this illustration of that where the world is going, and it brings us into a conversation, especially with the fact that T-Mobile had their hack in recent months. And so that brings us into these standards which already exist out in the market. If you have a hard time sleeping and you want to be able to understand what the federal government says when it comes to digital identity standards, you can go look at the NIST 800, which outlines a whole series of requirements that give you a higher level of assurance. And just to sort of show that NIST has been ahead of this for over 2 years, that they said that a two-factor an SMS authentication was no longer high enough level of sort of digital proofing that you are who you say you were. You have the challenges of when Apple Pay came out, there was a high level of fraud on there because you could get a hold of someone's debit card information. You could set up a phone account on their behalf, and if you knew enough information, you would actually be able to get set up as a secure transaction because you had verified yourself through knowing something about that individual, or you knew how the bank would verify, and it was some sort of knowledge-based authentication. And so these are challenges that are out there, and it's not the piece where the data is worthless and everything else when it comes from a passive side of a conversation is when it comes to being able to understand who that client is. It's just not as dependable as it once was. And so with this being said, there was a S2155, a very catchy title of a bill was passed several months ago that was part of the Banking Reform Act, or rolling back the Dodd-Frank. Now, there was a lot of huge different pieces of that regulation that was being changed and move around, and there is, if I'm in DC today, there's lots of money being made around being able to influence the rule writing that's come out of that. And so there's two really key pieces for the world of digital identity that's come out of this. The first one being here is the 213, which now states that when you scan a copy of a driver's license or a state-issued ID, you have to then delete that document after the account opening process. doesn't define a full period of time. You're still looking at, are they going to be writing a rule set around that, but they won't allow you to hold on to that image of the government ID. But more importantly, one of the biggest pieces, and it's having some of the biggest movement here, where there's the Big Tent Coalition, which is pulling together a lot of other industry bodies to work closely with the SSA, where you now are required to go directly to the source to be able to confirm someone's name, social security, and date of birth. Which is obviously have a lot of questions for the credit bureaus, and does it actually have the ability, the SSA have the ability to be able to start taking on those volumes? And so there's a lot of work that is happening in this space to make this something that doesn't cripple industry, but actually empowers them to be able to go directly to the source to confirm this information. So legislators are now thinking about this. The push and the macro trends of your data is out there being is not as protected as it once was, maybe here in the U.S. But what's really been driving the next level of conversation for the digital identity trends on onboarding is really going to come down to privacy. But one of the interesting places we're involved in ahead of sort of talking about privacy is we are one of the founding members of the Better Identity Coalition, which is really which has put forth a blueprint that has a series of areas of what's focused on to help the legislators to look at and to think about how to do digital identity better, which a major part of this is enabling DMVs to be able to become potential identity bureaus to help drive the same position you see from Canada and what Australia has as well pushed out, and it's the start of what's happening with being able to connect to the SSA is. Instead of having your data held in third-party non-government institutions that is commoditizing your data, it's going to be living in the government sources and then potentially moving to more of a decentralized sovereign identity, which we can talk about that later, but that is obviously a much larger can of worms. But it's been a great pleasure to work with the Better Identity Coalition to help drive some of these conversations about where policy is going. But as I was mentioning, with digital identity becomes the next major piece of to that is privacy. And so several weeks ago, I had the pleasure of being in China with FATF. FATF is the International Organization of Regulators, talking about the future of digital identity. And what are the pieces that are driving it, as well within New York with working with ID 2020, which is associated with the UN to try to help immigrants and displaced to be able to identify themselves in a universe. But what is really starting to sort of drive some of the challenges here is obviously, the wonderful, four-letter GDPR of that what's coming down to consent of what you can do with your data and who has access to it. For people on the call who don't know, California has passed Consumer Privacy Act, which is going to effect in 2020. It's actually more restrictive in ways than GDPR. You have all activity happening in DC around what I just mentioned, but also there is the Mobile Act, which is pushing for more authentic driver's licenses with more security features. And it makes you, when you go to the DMV, it's a much more robust proofing process where you have to bring up to 3 different proofs of address. You have to go in. And then you have a completely different, if we're talking privacy trends, you have on the other side of that scale is China, where obviously, but China goes with the other side that there is no privacy. They know much more about you, and it's run all identity programs and platforms are run by the government. And so, you know, the interesting question I get, and when I talk to our clients and at conferences, you know, there is the question that gets asked: if someone has the right to be forgotten and they're actually able to go out there and have their information removed from all online sources, does that actually make them more of a target to have their identity stolen? And it's an interesting conversation to have, and it's a point that gets brought up pretty frequently. But, you know, the other sort of side of all this, and one of the pieces I also started talking to, if you're looking at, look, the data has been shifting and not as reliable. You have, you know, Congress acting and driving to legislate and regulate the space over time. You have privacy. You also have the tech industry that is consolidating themselves and also driving towards, one, being able to compete in the fintech space, but also, you know, you have the LexisNexis and TransUnions of this world and Capital One looking to actually take in more services that aren't just database driven. You know, you're getting to the likes of these threat nexus organizations, and there's a, you know, Civ Science in the market who, you know, takes your activity, takes your behavior, your whole series of different pieces, and can build a digital footprint of who you are and track your behavior. And then also driving on the back end of this is, you know, any financial institution worth their salt, their ongoing transaction monitoring platforms and services, and the AI that drives that process is much more sophisticated across the board. And so there's a lot of different moving pieces here that actually is driving the conversation forward when it comes to digital identity. And so really what, you know, a lot of the challenges that you have is, in this world of your digital footprint, what you have here, this device proofing, your behavior analytics, all the way down to, you know, knowledge-based authentication, meaning, you know, if someone said who owns your car loan, or who owns your student loan, all these different pieces up and down this chain that used to give you a high level of proofing to move you towards a digital verification, as we're saying, is not the same. Being able to try to get them into that universe to say, I'm going to take that digital footprint and I'm going to pin it and put it next to, or be able to pin it to a carbon-based human that I actually know who they are in the real space. And that program is becoming much harder to do. And so this is where, you know, what we're doing for our clients and the conversations that we're having with, one, obviously heavily involved with financial services, but more importantly also in a lot of different spaces when it comes to chargebacks and on-demand services, sharing economy, anywhere that you're going to be building some sort of level of trust and security around that interaction offline. And so the place that we focus on, and what, you know, we're not the only shop in town, but we've focused our effort into driving the abilities to say, well, if we have all these different pieces, all that is great, passive, part of has the least amount of friction and a user experience, that this next step, and we'll say, you know, we say it in meetings when we speak to anyone around our service, that you need to be able to grab someone with their ID and grab a biometric. And so the reason that we focus on a government ID, as I've said before, it's backed by a government. A government at some point in time, someone has vetted that individual, has physically taken a photo of them. And so you get a high level of assurance that, you know, capturing that government ID will give you that's the person who they say they are, but then adding in a biometric and a liveness side of that to say, well, the selfie we just caught or the video we just caught actually is related to the government ID, or the picture of that person on the government ID, giving that confidence that you're going to be able to link, again, that carbon-based human to all their digital footprint of what they provided for you. And so that really gets you into what more of a binary moment of, well, 1 or 0. Have you been able to do that? And actually have a high level of confidence. Now, the challenge with this is, you know, that trust and security against user friction. And so depending on what type of company you are, you may want to actually say, well, we're going to, we support a lot of crypto and a lot of crypto clients and exchanges, and that universe has high level of fraud, and so they spend a lot of time in the user onboarding to make sure everyone gets through is going to have the most robust experience that they can then go through with transactions. Whereas on the other side of our platform and clients, they're only doing a small percentage potentially of their clients of that group that is a risk-based approach to say, well, we think that this group has because of all the other aspects that we saw, there's been some trigger from a risk engine to say, well, this could be a good actor, but they're throwing out the right signals that we want to give them a self-service way to identify themselves and get access to the service or reactivate their account. And so you won't have every user going through the higher level of friction of verifying themselves. But now over time, as more and more are going through the process, it's becoming a more normalized user experience. People are starting to expect that, especially for financial institutions, that there's going to be more friction in that user experience to be able to drive an adoption of an app. And again, it can be an app, it can be on a website, it can be through emails. There's many ways to get people to identify themselves, whereas they're much more trained. And so, we have banking partners that have a hard time re-verifying old accounts because they'll call them and say, hi, I'm calling from bank Y. We need to re-verify your account. And they don't obviously trust them because that's a known scam. And they have a hard time actually getting people to engage and interact to be able to go back through that AML process to make sure that they're still a customer that the bank can do business with. And so there's a lot of different sort of use cases and places to be able to support, especially from a risk universe. And so if you're willing or wanting to, you're able to go on to Google Play. We have a demo app. Go have a play with it, understand it all, and see see what that experience is like for you. But Neve, at this point in time, I want to say thank you to everyone. I know there's a series of questions. I'm happy to spend some time answering questions, and I'm happy to go back and talk about any of the things I mentioned through the last 30 minutes.
Brilliant. Thank you, Parker, for a really insightful presentation and for covering through so much material in such a short time. So we do have a couple of questions. And one thing that you touched on briefly was around decentralized or self-sovereign identity models. So could you go back to that a little bit and just talk a little bit about the benefits of and blockers to those kinds of models?
So there's two different models that the market is looking at. One model is that there is the consent model where a third party still owns is the wrong word, controls or stores a user's information. They will only pass that information onto a third party with the user's consent. And so it takes it away from the traditional model of a credit bureau or something else where the user has the ability to verify attributes or have control of their credentials. The other side is the sovereign side, or the full decentralized, where the user themselves has full control of their identity attributes. Either on their device or in a way that it's held in an encrypted area on their phone, a secure area on the phone, and in that universe, they have the ability to then release those credentials and give consent to a third party as they're looking to go register themselves or to do different, to sign up for a service, or to present information in a way. There's challenges with both sides of those. And the first challenge is, and it comes down to the regulatory piece, is not the consent, but the jurisdiction and liability workflow. Meaning, if I sign up with Bank X, they've verified me, and then I look to then go to Bank Y, who owns, when it comes to liability, who owns the liability if I become a bad actor or I am a bad actor and I do something, to the extreme of financing terrorism or something along those lines? Who owns that liability within a banking framework? And there's a lot of conversations, especially, as I said, with China and FATF, and I speak with U.S. Treasury and a series of other regulatory bodies. If that sort of liability and jurisdiction questions can be answered, there's then the challenge of the PR or the marketing hit that could happen around there. And so those conversations have some challenges. The other side, the challenges are if we're looking at a completely independent third-party identity wallet. Not saying these things can't be overcome, but you have to have a meaningful amount of users in that universe to then enable other financial institutions to be able to log in or use those credentials. And some of the challenges with that are purely commercial of who owns the user, and once you have a user, you want to make sure that user is sticky. A lot of platforms are, their evaluation is based off their users, and if they're able to then easily pass from one company to the next or one financial institution to the next, obviously that becomes a much more challenging universe for let's say the more traditional banks to work in. It's not saying it's not doable, but there's some headwinds when it comes to regulatory piece and the commercial side of who owns the consumer in the overall process. I think we're 2 to 3 best case scenario years away from getting to a meaningful place of having some sort of decentralized or this type of digital identity.
Great, and we do have another question here, which is, with the privacy trends in the EU and the US, what are your thoughts on privacy and biometrics? Are people going to be more reluctant to give up their biometrics?
Very good question. I think, look, biometrics already has a lot more privacy sat around than privacy controls sat around than let's say the traditional data of what was happening, what was the target of sort of GDPR, and let's say the privacy piece is happening, and that's targeting what's happened with how Facebook was enabling people to get deep details into our likes, our dislikes, our what our devices were doing, and then selling that on to other parties to be able to target and or do other pieces with. So biometrics have already been much more framed. So for example, with your Face ID, that on Apple, that is something that is completely locked into your phone and doesn't leave the device. And I think it will enable more security in the future, but it's still one of these pieces that people are going to have to be, again, careful with. And so I think the real, there's a lot of biometric players in the market. We have a service with it as well. But I think it's the one thing you have with you, and it's one of the harder things to spoof. But if anyone's been following the news, there's deep fakes and very interesting tech capabilities. The administration here in the U.S. came out. I forget if it was this week. I think it was last week, about their cybersecurity principles. There was a handful of them, and in their principles, there was a line around securing of digital identities and and stopping the use of SSNs or the large use of SSN in the markets. And so I think it's going to be the piece that will help us move forward, but there still will be a lot of privacy. Our personal data will get to the level of what our biometrics privacy is.
That's really interesting. And so another question here, which is that some fake documents are incredibly sophisticated. So how are you able to detect those sophisticated fake documents?
That's a great question. So the first thing I'm going to caveat, for all platforms is one, once we go from a 3D world to a 2D world, we're going to be at a disadvantage. So I have a California state driver's license. That driver's license, when you drop it on the table, it makes a certain noise because it's made with a certain amount of material. If you run your thumb over the picture of your face, your birth date is there raised, and you can see it if you look very closely to it. And so there is a level of, any platform once we get to 2D, we're at a disadvantage. And so I say that first and foremost. How we're able to do that is in the industry, there's been two ways that organizations or companies have built their platforms. One has been in a manual way where they have put humans in a room that look at images of documents next to a template, and that has its advantages in a couple of ways. One, the human will always give you a response, and two, for companies that have done this, there's large enterprise companies that have built their own internal teams. You can be in control of that risk side of it. The challenge of humans are they're incredibly hard to scale. They're incredibly hard to train when new tactics come back, fraud tactics come in to scale them up, and so you'll have a high and I'll say completion rate. You'll get a response, but you'll have a lower accuracy. Then there's the other side of the fence, which is a fully automated side where it's machine only. And that, again, has its advantages. Machines don't get tired, but those machines most of the time are working from a template-based platform, meaning they need a high-quality image. They push it through the template, and you get a determination from there. And so that if the machine can give you that response, you're actually going to have a higher accuracy rate. If they give you a response, but your completion rates aren't remotely as high as the human because the machine's not being able to make those determinations, and so your completion rate will be high, and then you're left with a percentage of your user base that wasn't able to be verified. And so our platform is we've used both of those aspects to build a hybrid approach. And what that means is we put a document expert in a room with a machine, with a data scientist. They build the models together. They start pushing data through it, and that human is there curating the machine, and so that means our models are ever evolving and they're not a static template. And so all our clients push their data through the same models, and then everyone gets that network effect to be able to verify who these are. And so we do our best to catch as the sophisticated documents as we can, but it takes, if a new technique comes through and something else comes through, we catch it or we're notified, and then we are able to build that into the models in real time to help all our clients understand the patterns and trends in the market.
All right. Well, I think that's about all that we have time for today. So thank you, Parker, for this presentation, and thanks again, everyone, for joining and for your questions. We will be sending around a recording of the webinar and the deck in case you want to go through it again on your own time. And of course, if you have any follow-up questions, you're more than welcome to drop us a line then. So thanks again, everyone, for joining, and enjoy the rest of your days. Thanks very much.